Epstein with your morning flash update for Solstice Day. Yes, June 20th, 2024. Wow, today's the longest Sunday of the year, Tropic of Cancer, where the sun goes, and then we start getting less sun. Interesting, isn't that? You wouldn't know it with the heat outside. You have a market of two different stories right now. You've got a very weak Russell 2000. You have a weak Dow, but you still have strength in the Dow and the NASDAQ. So the chip stocks still moving the market higher. All other parts of the market, not so good. We're looking at adding some yield back all of a sudden into the bonds and notes. In the grain markets, the big question coming in today was the heat over the holiday, yesterday, the Juneteenth, going to impact the market or not? And the market is answering, well, it was there, but not enough to do a lot of damage. And you're seeing that in nat gas, which is lower. However, with the July 4th driving season just weeks away, you're starting to get your bid. In fact, you've been getting a strong bid in gasoline. It's almost been a vertical price rise, which will weigh in when we get to the numbers that we look at for June. And the cost of fuel is going to go up, not down, and that helped this month in the CPI. When we take a look over at the currency markets, well, you had a number of central banks make moves today. The Norges Bank, which is Norway's central bank, stayed flat, and they said they're probably not going to make a cut this year. The Bank of England stayed flat. They didn't do anything. A lot of traders think it could be August or September when they could make a cut, but this will not help the current prime minister in his bid to keep his job. I think he's going to lose it, in fact. When we take a look then at the Swiss franc did cut rates by a quarter point. They want to be ahead of the euro, and they've done that. And some of this is coming back to play in the metals, especially the two markets that are industrial metals, the copper market and the silver markets. Why? Lower interest rates, and I've said this repeatedly, will spur on economic development, and the market is now becoming more and more convinced that is the case you're getting. Now, we did have a lot of economic data. We had the initial jobless claims down 5,000, not meeting what the market was hoping for of down 7,000. Continuing claims, though, rose again, and I think that's important. They did a revisionment, so even though it was up 15,000, it went up only 8,000 there if you take a look at it. 1,828,000, so it's 8,000 that it went up. The June business activity for the Philly, if you take a look, while the headline number is still a small positive, it didn't meet the expectation. I don't like that prices paid show inflation, but the other numbers are still in pretty much negatives. Here's a really bad piece of news. Housing starts down 5.5%. The market was not looking for that. It was looking for it down none, up 1.5%. So that's a huge swing to the negative. And the market was also looking for the permits to be up 0.7, and instead it's down 3.8. So what does this tell you? Well, it tells you you're going to have a housing shortage, all right? This is June. They should be starting to build, getting these homes done by the end of the year. They're not doing that. And in the pipeline and the permits, they're not doing much. Tomorrow we'll get the natural gas. So this is an interesting time in the market. You got to be a bit cautious here. At some point, will we get what I'll call a reversal where these two indices, the Dow and the Russell, pick up and the other markets down, maybe a correction? It could happen. We will see just what goes with all that. So with that, I'm Ira Epstein. You have yourself a great trading day. I will catch up with everybody at the end of the market with our market wrap-ups. Take care.